Good evening, everybody. How's everybody doing today? It is a great day here in Austin. Yesterday was really, really cold for Austin. I think the high was only in the 50s. For early November here, that's a little chilly. Today, a lot nicer. It got up into the back into the 70s, but it was in the 30s overnight. I'm like, woo, what is this weather? Kind of reminds me of being in of September in Chicago. I do like it. It's great to see people. Show of hands or give me a 1 if you were here yesterday. Let me know that you were here yesterday and that you saw what was going on. Give me a 2 if you were not here yesterday and this is your first time joining us. I see some 2s and some 1s. I'm aware you were here yesterday, Hannah. Why are you always stalking me, Mark Sebastian fan 007? Just kidding. All right. So we got a few new people. We do. And that's great. So what I'd like to do is I'm going to give you a minute or two here on what happened in the markets today. And then we're going to talk about kind of what happened yesterday or about the event yesterday. I'm just kind of get you up to speed. So just real briefly on today's markets, the fact that we closed up green in the S&P and the Dow, and that the Qs were barely down after it was announced that SoftBank had sold their entire NVIDIA holding. I think it shows you how resilient this market is. Now that the government is open, I think people are feeling a little bit better about things. The next step is going to be the Federal Reserve on December 10th, and then we're going to get some BLS data over the next few weeks, I would imagine. Those are going to be kind of the major things. Yes, Kat, the government is open yet, but it will be open soon. Our long national nightmare will soon end. All right. So yesterday, just kind of warm up everybody about what happened on Monday afternoon. You know, the first thing Hannah talked about was a book. And that book, I actually ordered it on Amazon yesterday after actually Walmart Plus. I ordered it as Hannah was discussing it. Now, I've read captions of it, but I haven't read the whole thing. And it's called, Where Are the Customers' Yachts? And the story there is a guy from, Where Are the Customers' Yachts? It's by Fred Schwed Jr. What a great name. Fred Schwed Jr. And two gentlemen are walking along the shore of the Hudson River. And the gentleman who wrote the book, Fred Schwed, was from out of town. And the other guy was saying, that's JP Morgan's yacht. That's, Dan Goldman and Steve Sachs' yacht. And that's Dan Morgan and Dick Stanley's yacht. For those of you to know, there was a guy named, JP Morgan was a person. And I don't know all of their names, but the Morgan Stanley, there was a guy with the last name Morgan and a guy with the last name Stanley. Goldman Sachs, a guy with the last name Goldman, a guy with the last name Sachs. Now, there wasn't a guy with the last name Citigroup or a guy with the last name Bank of America or a guy with the last name Wells Fargo, but there was a Merrill, there was a Lynch, and the full name of Merrill Lynch is Merrill Lynch, Fierce, Penner, and Smith. All people. So he was pointing out all of these captains of the market's beautiful yachts they had. And Fred Schwed looked and said, where are their customers' yachts? And the guy didn't have an answer. And it just goes to show you really what the financial industry is about. Now, I know a lot of financial advisors. I'm friends with financial advisors. Heck, I have my kids' money in with a financial advisor so that it's out of my hair. Now it's somebody I trust, goes above and beyond, and he advises for a song. His name's Mike Tusaw, great guy. But even he, one of the nicest people on the planet, legitimately cares about how he performs, is still in the business of gathering assets. He's still in the business of gathering assets. You know, when I'm going to tell you a story. I interned for two guys that worked at Merrill Lynch when I was 18. Now, I am still friends with these two dudes to this day. Great guys. When the reason why they knew me was that one of the gentlemen had done an insurance deal for my mom and dad. And when I interned there, it was a 3-month internship, about 8 weeks in, they said, you know, your internship's starting to line up. Things are starting to end. We should take you out and celebrate. And then they said this, and it's something I'm only realized in the last few years as we've kind of dug into this business. And they said to me, you know what, you should invite your mom and dad. Now, these are two guys that I had interned with that I'm still very close friends with. Why do you think they wanted to invite my mom and dad? Do you think the 18-year-old college kid, they cared about me? They could have taken me to Chipotle and paid for it. And I would have said, oh, wow, guys, thanks. Wonder why they wanted my mom and dad to come to dinner. What do you think they were after? Now, I don't know for sure, but I got a pretty good idea. Yeah, they thought, hey, you know, maybe we can pull in a little bit more assets from the Sebastians. So, you know, that's one story. And now that was not a story that I've ever shared. I think Hannah's probably surprised by that story. Now, here's the story that Hannah did share last night. All right. For a brief period of time, and it was regrettable. I didn't really enjoy working there. That's why I'm here. I worked for a large mutual fund. And we had one of our large clients, we were a couple billion under management. One of our largest clients, we had kind of two pieces. We had separately managed accounts, and then we had the mutual fund. We were the largest holding of this group's separately managed accounts. And I think this firm in total had across all their advisors had close to $1 billion. And we were a quarter million of that. We were 25% of that. $250 million. Across the group of advisors, there were probably 100 of them in the room. We probably had $150 million under management in that room. You don't need to guess where I was because I'm not going to tell you. And, you know, they told me the conference started at 9:00. I was assuming that at some point in time I would get to speak. But, I watched as it was like, here's a new system to gather assets. Here's a new system to evaluate whether your client should be saving more money with you. Here's this, here's that. It was entirely about gathering assets. Entirely. And then at the end, there were, they gave an opportunity to speak for the asset managers. They gave me 15 minutes. I gave kind of my presentation. And then I had 5 minutes for questions. And I didn't get any. And the lack of curiosity in terms of what I was actually doing for their customers absolutely flabbergasted me. And it led me to the conclusion, more so than ever, the only person that truly cares about your wealth is you and your family. What you create for your retirement nest egg and what you pass on to your children, the only people that truly care about it are you. During this last mess, my mother-in-law tried to call her advisor. He was in Africa on safari. Now, most advisors, they do want to do what's best for you because it's in their best interest too. But they're not curious. They don't know enough. And they're really experts on selling, not experts on finance. And so what our challenge here is for you to take back control. And what Hans has built is an opportunity for you to take back control. Yesterday, we went through two scenarios. Someone with $100,000 in retirement, someone with $1 million in retirement. Today, Hannah and Hans and Andrew are going to walk through a small account. Now, each of these accounts have different goals, different targets. If you're with an advisor and you've got $10,000 and they're telling you put it in S&P funds, and you're not 18 years old, that's not really the best advice. And so what Hannah is going to guide you through, with the help of Hans, the master of Option Pit income, turbo income, and with Andrew as her guinea pig, is how you can grow your assets at an accelerated pace. Now, yesterday we talked about the income side, Hans's option premium selling side that has the ripcord strategy. We talked about leaps. Today, you're going to learn about turbos and how turbos can ramp up your returns. So what I'm going to ask you to do here when you join us is get out a pen and paper or open a doc and start taking notes. Because you're going to learn more. Every time we do this, we want you to learn. And everything we do, just a reminder, is CRT certified. Consistently profitable, repeatable, and teachable. So we're going to bring on Hannah here in just a second. But I want you to just remember these things. 1, advisors, number 1 thing is to sell. Their number 2 thing is to grow your assets. 2, nobody cares about your assets and your growth more than you. And I can promise you that you have done more studying on financial markets than about 95% of your advisors. And 3, Hans, who's managed well over $1 billion in asset strategies for clients in Canada, is the man to guide you through that process of growing your wealth in an accelerated fashion with proper risk control through his ripcord strategy. We saw what it can do for people with $1 million. We saw what people can do, what it can do with $100,000. We're going to look at $10,000, but this strategy fits the gambit. 10,000, 25, 50, 100, $500,000, $1 million. For those of you that are willing to take control of your financial future, the reason why we have Hans here and Turbo Income, and we've never had this type of strategy before, is because there was never anybody that I truly believed in. And Hans and Andrew and Hannah are going to guide you through that process here.
Hi, Mark.
So let's bring on Hannah. There she is.
That was
Hannah,
like we had
good to see ya.
telepathy just then. Hey, that makes me think of all those old TV shows where they do the simulated round of applause for the live audience. Every time that we play that, it's the best. Hi,
Yes.
everyone. Welcome. Thank you guys for being here. We'll bring Hans on in just 1 minute. Introduce yourself. Say hi in the chat. Mark, did I hear that you took my book recommendation?
I did. I went on Walmart in the middle of your presentation yesterday. But while I was waiting to come on and do my part, I was like, I got to get that book. And I went on Walmart and bought the book. It's going to be here on Monday.
This is the book he's talking about. If you guys just joined, this book was recommended to me about a week or so ago, and I got it. And it's one of the great things about these older books. This was published in 1940. Is look at how big the font is.
Oh, nice.
So I cranked through this bad boy in like a day. Also, Fred Schwed, the author, is extremely funny, and it's a very quick, easy read. So if any of you like reading about the markets and the history of the markets and really a history of what financial advisors' motivations are, you should pick up this book, Where Are the Customers' Yachts? It's great. You'll be reading it at the same time as Mark, who also...
Yeah, if your name is Fred Schwed, you either have to be incredibly hilarious or like comically unfunny. That's the only options that you can have if your name is Fred Schwed.
So true. Everyone who's here, please introduce yourself in the chat. Say where you're coming in from. We love to meet our audience. For those of you that were here last night, welcome back. And for those of you, this may be your first night, welcome. No worries. We'll catch you up on what you missed yesterday. And if you could only make one of the days, I'm glad it was today, because we are going to, we do have a special offer for you guys here tonight. So if you can, please stick around till the end. There is something coming that we don't normally do, and it's for the people who are present here. So stay in your seats, I guess. If you have a piece of scratch paper or something you can get out, there will be a couple points tonight where you probably want to jot a few things down. There are also a few free bonuses that we sent out to the people who registered for tonight. You can find those below. There's 2 free reports and then a rubric that has some instructions that will help you pinpoint the amount that you actually need for retirement, which is what we're talking about driving towards. So all that's right below this video. If you just scroll down, there's a couple links there that you can click on. We've got, let's see, Nalini. I remember you from last night, Lake County, Florida. Hello, welcome. Another Sarasota, Kansas, Land of Oz. I love it. John from Washington State, Kentucky. Mark is in Austin, Texas. Shout
Yes,
out all
I
our
am.
Texas people. I'm in Denver, Colorado, born and raised. There are fewer and fewer of us all the time. So if I got any Colorado people, make sure you say hello. Mark, thanks for getting things warmed up here tonight. Are you gonna stick around and listen to the prezzo?
Of course. I would never miss one of our presentations. I make it a point because even I'll pick up a thing or two listening to what the traders are talking about. You're always good at pulling out kind of new twists on things, Hannah, or new insights out of the guys that I work with and ask him questions that I don't think to ask. And so it's always worth it for me to sit and watch. And I've been at this for 25 years. So if I'm going to find some value here, I know you guys will.
We will make it worth your while. Jeffrey J. Smith 007 was born in Colorado Springs. Jeffrey, great to see you. Mike M. from CO, I see you all the time. Welcome. WA has a sense of humor. He's from the earth. Love it. Went to DU on a hockey scholarship moons ago. I love it. My gosh. Gibby won. My grandparents have had season tickets to DU hockey games since I was 10 years old. And quick funny story, then we'll bring Hans on. A couple of years ago, I was at a DU hockey game. That's the University of Denver. They have a great hockey team. They've had a great hockey team forever. I grew up in a big hockey family. So, but I went to a game with a couple of my siblings around last Christmas time. And at the beginning, after they do the national anthem, they were singing the fight song. And I didn't even know that I knew the words to the fight song. But from going to so many games as a kid, me and both my siblings all knew the words to the fight song, which was wild, funny. I thought. Just a sweet childhood memory. So I love that you're here. That's amazing. All right, Mark, we are a few minutes after. I'm going to get started. Thank you for setting things up. I hope you learned something tonight. I'll see you in a bit.
Everybody have a great evening. Enjoy the discussion, and I will see many of you tomorrow. Have a good evening and get ready to learn.
Hans, if you are here, please feel free to join me. I'm going to pull up our screen and we will get cranking. How you doing, Hans?
I am well, Hannah. How are you? I'm feeling great.
I'm feeling spoiled 2 nights in a row.
We're making this a habit. It's becoming a habit, I think.
See you tomorrow. Just kidding.
I was laughing at the everyone's obsessed about that old book, and I was thinking, where are the customers' yachts? They have one, but it's more like a dinghy, like a little inflatable, and it's called, I came up with a name for it. It's called Ship Happens, as in, your FA's got all the money, and he goes, sure. Ship happens, but he'll probably invite you to his country club at some point.
It's more of a raft, really.
It's a raft, yeah.
Yeah. But we are going to work on getting our own yachts. That's what we're here to talk about tonight. So there are some people here tonight, Hans, who were not here yesterday. Can you just take a minute and sort of introduce yourself? We brought on Hans a year ago to Option Pit to do income specifically. Just talk about what that means, a little bit about your history, and then just so we can pull up my screen and get started.
Well, Hans Albrecht, so a deep history in the investment industry. So 15 years as a pro options market maker. And then another decade after that, running a whole bunch of income funds. So what's that magic word we're talking about tonight? It's income. And that is a word that resonates with really everyone, right? Who doesn't think about income, worry about income sometimes, and really wants to focus on income? That's pretty much everybody. And so a really long history of running a whole bunch of income funds and really changing the way that income funds were run in Canada, because I came from that market maker side and I understood more about option pricing and risk and that sort of thing. And that's really kind of what we're going to talk about today, is how do we do things a little bit better? Because if you guys may have heard of some of these income funds, they don't do very well, but they're very popular. And so let's talk about something that should be more popular, and that's making money for ourselves. And that's what we're talking about today.
2 thumbs up. This is day 2 of a 2-day summit. So if you missed yesterday, no stress. We're going to do a quick recap for you. We'll also post a replay. If we can just drop that in the chat, you guys, if you want to go back and watch day 1, you absolutely can. We do walk through two different sizes of accounts, and Hans basically narrates exactly what he would do in terms of allocation, the types of trades, etc. So if you fall into the $100,000 account bucket or the $1 million account bucket, definitely take a second and check that out. Income Summit 2025, day 2. Let's go. Option pit disclosure. We always show you guys this. This basically says that everything we're going to show you tonight are our opinions. This is Hans' strategy. Yes, he has managed over $1 billion and made millions of dollars, but this is his opinion. This is what he does. So anything you choose to do based off what you see tonight, you're an adult, your decision. Yesterday, here's an overview of what we covered. Financial advisor returns versus Hans returns. We'll show some more of that tonight. We went through a $100,000 account and $1 million account. We talked really about the first 2 types of income. There are 3 types of income trades that Hans makes. And if you think of your whole portfolio like a pie chart, he breaks it into really these 3 sections: income, leaps, and turbos. And you might be saying, Hannah, well, one of those is called income. They're all income strategies in their own way, okay? Tonight, we're going to spend the most time talking about turbo trades, because especially for someone who has a smaller account, like the $10,000 account we're going to look at tonight, that expedited growth is really, really important. We will start with the $10,000 account. We'll walk through that. We'll show you a history of turbo trades. So over 2025, so far this year to date, turbo trades have grown an account 245%. We're actually going to show you tonight all of the turbo trades that Hans has made, and we're going to walk through some examples. So if this is the first you're hearing of a turbo trade, don't sweat it. We're going to show you some examples and walk you through exactly what that means. And then we're going to show you, so I actually thought of Hans, a great name for the income calculator that we were using yesterday. I don't know if any of you guys that are here ever used a calculator for calculus or something that's called TI-84 or TI-85. They're Texas Instrument calculators. Well, Hans's income calculator, I think we should call TI-25, which stands for Turbo Income in 2025. So we're actually going to have a bonus probably later this week where we can give you guys access to TI-25 to make your own calculations. So get excited for that. That's going to be cool. Andrew is going to come on to represent our $10,000 account. So if you're someone who has a smaller account like this, Hans, what would you say? I mean, the biggest needs for someone with a smaller account has to be quick growth, correct?
Absolutely. And so I kind of tongue in cheek, I kind of call the turbo strategy what we use when we want to be strategically greedy. And there's nothing wrong with going for it once in a while when you do it sensibly and thoughtfully. And so absolutely, with a smaller account, this really fits in very, very nicely. And that's really one of the main points of Turbo Income, is to really show you guys tonight that really it isn't it's not size that defines potential. I'll avoid some obvious jokes there. Size does not define potential. Process defines potential. And we're really going to talk about the process for this size account tonight.
Let's dig straight into it. Let's look at a $10,000 account. Andrew, you want to pop in? You're going to represent this account for us tonight. Let's have you take us through this and the questions that you have. Andrew, are you there?
I believe I am here right now. Hello, everybody.
Hello. I love your color palette tonight.
Me
Very
too.
appropriate.
It was Veterans Day, so I did red, white, and blue today.
Beautiful.
We love it.
So, for a $10,000 account, these are my questions. First off, allocation. Like, what do I put in per trade if I have a $10,000 account? The second, what is a cash reserve and why do I even need it? Don't you just put all your money into one trade at once? I don't think that's the answer. And then last, available to deploy. So just describing how you used a professional technique to manage a $10,000 account. So I kind of want to start in those areas. So I believe.
I love that, Andrew. I love that. Well, I mean, look, this is why we're going to have a great time tonight, because many people are in a similar situation. They're saying, well, what happens when my account isn't 6 or 7 figures? What if I don't have this amazing head start? And that is what we're talking about today. We're going to talk about the appropriate mix, is what you're asking for, how we approach that size account, so that we can turn that 10 into 20, into 40, and et cetera, et cetera.
So you're saying you have to have a little plan around this. You just can't you can't just YOLO right at the beginning. You actually have to put a little thought into how you allocate per trade, the idea of what a cash reserve is, and then understanding how much you want to have, let's say, deployed, or the max you want to have deployed at one time. Yeah. So these are actually things you need to think about before you just go in and just start putting trades on. Absolutely. And then we can adjust when we get to that 40, 50, 100,000, then we can start to alter the strategy a little bit. And so you talked about this concept of having to put some thought into it. That's kind of scary, isn't it? Don't we hate putting thought in? Well, I know. It's like, I would just rather, and I think that's why people, they gravitate toward the RA because they don't want to think about it. But if you want to think a little bit about it, or even worse, a little effort. Yeah, even worse, they wing it. And they just kind of go, okay, well, let's just see. And then winging it sometimes it doesn't work very well. But the part here is, and this is what I think is the interesting part is, so if you want to choose a path where you are using a little of your head, you now have also 3 areas to allocate money to. So we have the income, and I know you're going to explain these. We have the income bucket. We have the leap bucket, and then we have, which people are going to learn to love, is the turbo bucket. Okay, so you're going to understand what the difference of those 3 buckets are and how you want to allocate the money to them. That's a fancy name, right? Turbo is kind of a fun name that I came up with. It is kind of fun. It makes me think of Knight Rider in the 80s, right? Let's, like turbo boosted. There's this car that used to talk to. Some of you are probably way too young for that, but it was this talking car, and that was kind of exciting in the 80s, right? Now it takes a lot more to get excited. But let's launch into it, Andrew. So let's think of how to get this account working. We want to compound. We want to build momentum. And so number 1, allocation per trade. So just like the last day, if you guys were here yesterday, if any of you were here yesterday, rule number 1 does not change. 3% per trade. So in this case, that's going to be $300 on each position. That's going to keep our risk defined. It's going to keep us being able to be repeatable and continue onwards. No matter how our trades are going, we're going to keep putting in an appropriate a size into this. We're going to trim that cash reserve just a little bit. So we're going to get 15% in cash here. And so that gives us a little bit of flexibility, and we're going to come to that in a moment. And then that's going to leave us, of course, with the $8,500 to deploy into the strategies as we move along here. So what we do next is, of course, we have our allocation. So, well, what are we going to put it into, right? So now this is where things differ just a little bit from yesterday. We're going to see how that breaks down. So 25% in our income trades. That's going to be your 2,500, your 2125. Another 25% in leaps trades, right? The 25% of the 8,500. And then 50% in our turbo trades. Okay, so why 50%, guys? If anybody was watching yesterday, this seems a little bit higher, right? Because we got the income sleeve to kind of keep the engine running. So think of that strategy as a little bit like, okay, we're going to hit those singles, which the Jays didn't do enough of the other day, which is very, very upsetting to me. I'm still smarting from that. But we're hitting a few singles. We're establishing that beautiful foundation, and income often represents that foundation. And then the leaps add that steady exposure, right? And then those turbos are those turbo boosters, those turbo rockets that we like to get to really start moving the needle a little bit.
So for those of you,
I just have one quick question about. So one thing about income versus leaps is like when the market's not doing anything, that's when the income kind of And that's personally, that's why I like this whole concept, because it's basically what I do is you got the income for when the market's going sideways. Now this year we've had, obviously you've done really well this year because you've had the trades that have really just basically exploded, right? You've had great stocks. There are some years too where the income kind of pays the bills because not as much is happening. So it does help bring a little, bring some bucks in when stocks are kind of flattish. And I think that's why it's nice to have a little balance. It's my little piece there on that one. I like that.
I'll just
always like
add
that.
one thing to that. I know Hannah wants to move on. I'll add one thing to that. And that is really what I kind of call when the market wants to do a little bit of the work for us, then we react appropriately to it. When the market's struggling, well, then we're going to sort of lean on those income trades a little bit because the market's struggling. It needs a little bit of help. So we're going to use these trades. And that's the wonderful part. One of the many wonderful things in the strategy is that it is market agnostic, right? So we are going to see an indicator later on that we use that is going to tell us, hey, buddy, we are more in an income environment. Or take a look at this. We're starting to see more turbos, and we're going to see that in a moment. Hannah's going to go over that with me in a moment.
The last thing I just want to point out really quick. So for those of you guys that are here tonight, you may even if you have a retirement account that's much larger than this, larger than $10,000, it's very possible that if that money is sitting with an FA right now, you might not feel comfortable taking all of that money and trying to do this approach with Hans. Like, it's just a lot of control, especially if you don't feel comfortable. So one thing I would like you to think about is if you have $100,000 or $1 million or something with an FA, you could have them give you a $10,000 account, and you could start with this type of structure, get comfortable with income leaps and turbos, and then you could scale up once you feel confident and want to use more money in it. Hans, you and I talked about this yesterday. Like, this is a great starting point for someone, even if they have a much larger nest egg, but so that they can grow their confidence in their control and execution of this with a smaller account. And then once they feel great about it, they can scale it up, change their allocation a little bit, and they're really off to the races.
Great call. Love that idea. Dip your toe in, get a feel for it. And I really, as a trader, I love doing that. If I'm sort of starting something out, I start small and I gain confidence and I increase my allocation as required.
100%.
I concur.
All right. So now let's take a look here because we happen to have a nice us versus them kind of thing going on here. How do we look versus that typical financial advisor, which we have, colorfully named Steve Jones's or something like that? I can't even remember. But anyway, something sort of, fairly bland, right? Actually, Hans Albrecht, my name is quite bland. It sounds kind of exotic, I know, but it's actually kind of like John Smith in Germany. It's really not that interesting. Anyway, so your FA, so we've got our trades here. We can see that we've got 18 trades in the income bucket, 14% average return. So this is based on this is not based on reality. This is reality, right? So we have done this year. So I want you to keep that in mind. In the back of your mind, this is happening. If you want to experience this, there is a way to do this. So 18 trades in the income sleeve, average return and profit of 774. And we can see the account growth in this portfolio of 36%. In our leaps trades, 13 trades. And you're going to notice some different numbers here in these columns. And then this results 40% average return on each of those. And we get our 74% account growth. Right. Turbocharge it. We get 44 trades, which, as you can clearly see, has been a popular trade this year, 55-15, and then 130% in account growth. And as we said, that moves the needle for you.
Right. So even if we were to play with this a little bit, because we were talking earlier, Andrew, for you, since we stuck you with the smaller account, you really need that quick growth. If we were to allocate this differently and say this was 20 or 30%, there's no way that we would get all the way to this 5,500 number, which is obviously the biggest chunk of this account growing. So being able to take an account that's $10,000 and nearly double it by the end of the year. And just like Hans was saying, for those of you that maybe weren't here yesterday, these are real results. These are from Hans' actual trades so far in 2025. He's made 18 income trades, 13 leaps, and 44 turbos. We'll show you all of them in just a little bit, but he's basically taking this exact account and showing you what the real money results are trading this so far this year. And it's specifically for this account, really leaning into those turbo type trades.
Exactly. There you go.
We did also keep a section of this account in a cash reserve. Now it's a smaller section, but Hans, we talked about this yesterday. Can you talk a little bit about why you keep a cash reserve at all and what some situations are where you might deploy that cash reserve?
Yeah, love to have that cash, a little bit of cash on the sidelines. We call that dry powder sometimes. I'm sure some of you have heard of that. Let's keep some dry powder just in case the market gives us the occasional gift. Of course, we think of sell-offs as something, possibly a bad, traumatic, but it is actually a gift in many cases as we are able to pick up things that we really, really love. So we want to have that list ready, right? We want to have that shopping list ready for when we get that Black Friday sale, which of course is coming up. We hope we don't get a massive market swoon, but if it happens, we are ready for it.
That's part of the benefit for you, Andrew, too. I feel like I'm trying to sell you on this, but part of the benefit for you is that you don't have to look for those ideas because Hans is already doing it for you. So
I always like it when the other people at Option Pit look for the ideas for me.
You've got a busy day with the other stuff you're doing. We're trying to work towards a retirement here.
The ideas come in, to be honest. So
100%. So Hans, you did deploy some of the cash reserve this last year. I think it was during mostly the April correction, but can you just walk us through like these couple of returns and what this did for the overall portfolio for AG?
Yeah, so two of my favorite stocks at the time, and probably still. So Uber came down. Of course, we saw what happened in April. We had a Liberation Day and a big swoon and a tariff tantrum sort of thing. And then so we got some nice opportunities. We picked up some Uber leaps. We picked up some hood positions. And when you're able to do that in those panicky situations, a bit like Buffett says, buy when there's panic in the streets, when there's fear in the streets. That's exactly what we did. And you can see the returns there. That is going to imagine doing this throughout the year. And every year, I can't remember what the statistic is, Andrew and Hannah, but every year we typically get a 5% sell-off, a couple of 5% sell-offs, even sometimes a 10% sell-off. It is that's part of being in risk markets. And so being able to take advantage of those is a real plus. And that is going to really help to move that proverbial needle that we talk about.
100%. There's a great question in the chat that I just want to put a pin in for us, Hans. Sal was asking, in 2025, we had a great bullish wave since April. They're guessing that helped the strategy. So they want to talk about, and maybe you can just address this a little bit here. We will show the full track record in just a second, so you can see like for different points of the year and what was happening with the market, kind of which types of trades Hans was using predominantly, because they kind of come in and out of style as the market gives him opportunity. Andrew says this all the time. We're not trying to swim upriver. We're trying to swim with the tide. So we want to take what the market gives us. It's going to be way easier to have success. But can you talk a little bit about how your strategy maybe evolves, especially for someone with a smaller account like this, when SPY is going sideways or a bear market? Because I'm guessing that the atmosphere for turbo is kind of going to suffocate itself. So how would that work for AG?
It does. And absolutely. We've had a good run and we've taken advantage of that. And it's not so much that we have a hunch. This is a built-in indicator. It's a built-in system. And when it tells us to step on the gas, that's what we start doing. It's a bit like, it's sort of like having you're on the golf course. You don't go out there with one club, right? You've got a bag full of clubs. And depending on the shot, if you're in the rough, you're not going to grab your putter. You're not going to grab your driver. You're not going to actually get very far. You try to hit a driver through heavy rough. You think it's the longest club in your bag. That ball's not going to go anywhere. So what's beautiful about this strategy is you have different clubs. It's that Swiss Army knife. I'll grab another one. It's a Swiss Army knife that evolves with the environment. And absolutely, if we get into a more sideways, difficult environment, we're going to get a lot of yellows. And that's going to be our chance to grab more income trades. So for sure, very blessed. We've had a wonderful market. We've grabbed some turbos, and I've been in many markets where the income trades now start to take over and become more prevalent in a strategy. And that's okay. That's being aware of what the market is doing and adjusting with it.
So right now, Andrew's on the course. What club is he grabbing with this edition?
You're gonna let the big dog eat, Andrew. That's what's going on here. You're gonna let the big dog eat, which means you're gonna grab that driver and you're gonna stripe it right down the middle, because you are looking at the right things. You are allocating to quality companies, to companies that are in the right themes, that are doing the right things. And we take all of these we're not going to go over every single metric and thing that we look at, but we are setting ourselves up for success by looking at the right things.
Right. And also for everybody to look at, just look at, these are the average return column, F, right? Average return per trade this year with the strategy. Like the income trades are going to have a little bit, again, they're the more steady eddy. Leaps and turbos are the things that are going to kind of pop things. So when you're looking at it, just, there's a strategy and there's a return for strategy on average. So just to give yourself an idea of what's going on. And then like right now, it's the end of the year, Santa Claus rally. I'm just going to say, these are the times you might want to step on the gas a little bit. And part of the key is, don't forget, allocation is part of the key. You don't have to be all in all the time. You're being strategic. The whole point about having Hans do this is he's being strategic about how he puts money to work. That's part of what you're getting with the strategy. Just so I'm saying that for you, so you understand.
We'll show this in just a second too. Hans talks a lot about the phrase strategic greed. So there are times when you really want to pour gas on the fire, and there's times where you want to put the oven mitts on, okay, so you don't get burned. And we'll show that a little bit, especially in the last year. Name in the chat, like put the month in the chat this year where we had the biggest correction. Everyone should remember this, because I remember looking at my own financial accounts with my financial advisor and being like, what the actual heck? This is terrible. What month did that happen? Put it in the chat. Yeah, April. You guys remember this. There was basically like an overall 10 or 12% entire market correction. Hans was actively using this strategy while that happened. And we'll look at what he did. He turned down the gas a little bit. There were less trades than he normally makes, but I think you guys are actually going to be pleasantly surprised by what those results look like. And we'll show those in just 1 second here. So, Andrew, do you have any more questions for Hans before we show these returns side by side with what a 10K account could expect from an FA?
I mean, what I want everybody to understand is, I guess I don't have as many questions as getting people to understand that there is a method to every piece, and just that's why it works and bring results. It's hard unless you're actually in it and you understand what allocation is, trade reserve, and then putting on the gas on certain trades when the market is in a better way, when the market is more poised to jump. And that's part of what joining this is. So I want people to kind of sit here and just listen a little bit for the next 10, 20 minutes on how he goes about doing this. So, because it's unique and it's worth checking out. But that's how you do it. There's always a little trick, and Hans is going to give you a couple of his little tricks here in a couple of minutes.
And you're a busy guy, Andrew, as you said. So this is, you have to understand, there's a little bit of a commitment here. We get together once a week. You get to listen to me go on and on about nonsense and very important stuff too, thankfully. And so we're not doing these trades for you. You're not wiring any money to me. The money stays in your account. You're going to place these trades just as I described them. You get an email, you get a text if you signed up for it. You get very, very clear instruction on why we're doing things. There's a 24/7 chat where we're chatting and talking about stuff, about the trades. And so that's really the nice thing, is you do not need a ton of time for this. So it's really that feeling of empowerment.
I guess that's all the questions I have for now. Mostly this is just, I like it because this is mostly how I run my own account. So I like a little income and I like a little upside. And Hans does this very well. So if you want to stick around and learn how to do it, this is a good place to do it.
All
Thanks,
right, so
Andrew.
let's compare ourselves, Hannah.
Let's do our side-by-side comparison with the FA. So what you guys see right here, this allocation, 50% turbo, 25% leaps, 25% income. What we're going to show you now, so you'll see that matches, go back. That matches the same allocation here. See, 50% turbos, 25% leaps, 25% income. Now, for some of you that maybe weren't here yesterday, we talked a little bit about what an FA traditionally does. If you give them your money, what are they actually going to do with it? Usually there's a big chunk that's in stocks, there's a chunk that goes into bonds, and then they may do something with a small slice that's like commodities or crypto or something more exciting. Depending on your age, like if you're going to be 65% in stocks, 30% in bonds, you're probably a little bit younger. As you get older, that ratio usually flips. So the older you get, they're going to put more in bonds and less in stocks. But just so you guys are kind of oriented to what you're looking at right here. Han, do you want to take us through this? I'll kind of click us through, but let's look at a side-by-side comparison here, starting with John Smith, who is the most infamous FA you've ever seen.
Right there you go. John Smith. He's looking good in his suit. He's young. He's eager to gather your assets primarily, and you can see he's gotten you into the S&P 500, the SPY basically, and you've got that nice return there, 988. He's gotten you into some fixed income, TLT, $81, and then gold. Of course, he's thinking, well, you got to have an allocation to. I'm quite surprised that a young man like him, he hasn't gotten you into Bitcoin or Solana or something crazy like that.
Right.
So here you go. 1,310 year to date. You're going to take off a little bit for his management fee, right? He's got his 1%. You might pay 1%. You might pay 1.25%. You might pay 1.5%, depends. And that's going to give you a net result of 12% gain on the year. So let's look at Hans's portfolio. Let's go through the math again. Income 25.8% year to date, leaps 70%, and your turbos with a 245% year to date return. You throw your cash reserve back in there, and what do you end up with at the end of the year? Well, 88, 87 on top of what you started with. So that is pretty good. Now, Hannah, there's you take off the $2,000, let's say a rough estimate for the program, and it isn't even that much. We'll talk about that later. And you're still up 68% on the year.
Do we have any questions in the room about this? We went over this a couple times yesterday, so I don't want to beat a dead horse here, but if you guys have questions, if this is your first time, please ask them now. The whole reason why we have this presentation and are putting this together and talking to you about it is for you. Is this making sense? What questions do you have so that we can clear it up and you can get started actually using this strategy with Hans? We're going to walk through a couple turbo trades in just a minute so you can actually see what really the most powerful piece of this strategy, how that actually works. And we're also going to show the track record in April. I know a bunch of people are asking about that. And we'll show some averages, how long Hans is in the trades, how much they cost, et cetera. Just some of the logistics.
Yeah.
Andrew, did we convince you to become a customer of Hans's today?
Yeah, but I actually just get his notifications. So
Andrew, thank you for joining us. We're going to hop and go through some of the turbo trades, but thanks for being here. If you want to stick around, you might learn some tips and tricks about a turbo trade.
I will graciously retreat from the screen.
Thanks, Andrew.
We appreciate you.
Have a good night. And let's remember, Hannah, that we're giving John Smith quite the benefit of the doubt here. He's got you into the S&P 500. And I did want to mention that this year, active pickers have basically stock pickers have underperformed. And, these fund managers on TV have underperformed the worst in decades versus the index. So they're underperforming versus the S&P 500. And it's the worst performance we've seen literally in decades. And so
you said
John has you in the SPY.
You said that yesterday, and I just want to stop on that for 1 second. And we're going to look at turbos in just a minute. We have a bunch of examples we're going to show you. But I want to stop on that. The S&P 500 is up over 15% year to date. So how is it possible if FAs are trying to kind of hit the middle. How is it possible that they underperform so badly this year? How is that possible?
You know,
I don't understand that.
it's year after year after year. They really are what we call closet indexers, right? They don't just put you in
What's
the
that mean?
SPY, right? They're not just going to buy the SPY for you because you're going to say, well, John, I mean, I can do that myself. I don't need to pay you 1% a year. So they're going to get you into a little bit of this, a little bit of that, and they're going to say, hey, Hans, we've got an idea. Somebody, somebody well informed just told me I've got this. So every now and then they'll throw in some harebrained idea where it seems like they're kind of adding a little bit of extra value. And then they'll call you every 3 months. And really what happens is you take their fee off, you take the fees off the fund, that the funds or products that they've gotten you into. And it's very, very difficult for them to keep up. And quite frankly, they really never quite allocate enough to the larger market cap, the big mags, the ones that are really driving earnings in the S&P 500, which is confusing to me because it's been very clear for 15 years that that's where the earnings are.
We talked about this a little bit yesterday. The reason why they do a lot of that, for those of you who maybe weren't here, is because they don't want you to take your money out. So if they give you more exposure to some of those areas and you see some red in your portfolio or you have a flat year, those are things that can cause someone to take their money from the FA, where the FA needs that to actually be able to charge you every year on the money they manage. So their motives, FAs are not bad people. I have one that does a portion of my income. I really like him. He's a nice guy. We're friends, so I got a little bit of a lower fee. Like, he's a totally fine person, but he just has a list of 150, 200 other people in addition to me. So he just can't. He's never going to treat it the way that I will treat it. It's not his money.
No, it's a kind of it's almost a bit of a psychological study in a way, because there's no real upside to taking any big chances. But if they do take a chance and they do much worse than the market, you're going to call them up and go, well, what happened, John? I did so much worse than the market.
Right.
There's really they're kind of in a difficult position where really it's the best thing for them is to try to toe the line, which is kind of do as well as the market and not really take any chances. And then once you take all the fees off, well, and those add up over 30 years. You think a few percent here and there are not going to add up? They absolutely do.
100%. Let's get into the most exciting type of trade, in my opinion, the turbo trades. Talk to me about exactly what these are, Hans. And then for everyone here, we're going to go through how Hans knows when to put a turbo trade on, and actually an indicator that he has that he uses to tell him to get into and out of turbo trade. So take us through this.
Yeah. So in order to talk about the turbo trades, Hannah, we have to talk about the market temperature indicator, a little hint. So we're going to let me kind of explain what this is, because it's what we use to tell us when we should be getting into a turbo trade, when we should be moving perhaps more into an income trade as well. So my proprietary indicator is going to bring all those factors in that are important. Now, each turbo trade has two sides. Okay, so this is the important thing to know. There's one side that's going to generate some income, and the goal is to use that income to pay for the second side. So we get an income side and we get an upside side. That's the split.
Okay, so you're basically financing the trade.
Exactly.
Okay. Let's talk about when you kind of know a turbo trade. So let's just say, take Netflix, for example. You might like Netflix, no matter what your long-term, whatever idea is of where Netflix could go. And if you're trading income or leaps on it, how would I know when I want to put a turbo trade on in Netflix?
You start getting the MTI showing you perhaps going from a red to a yellow to a green. You get a strong green, which is an even better green. And then two full greens means go. So that two full greens is your indication that the stock has that explosive potential, as you have written here, and that upward potential that we want to put on for a turbo trade. And it's always interesting to watch. We're going to see a few charts in a moment. It's not always that first break. So when everyone else is jumping into something, the MTI kind of sits back and goes, no, I need to see a little bit more. I need to be a little bit more convinced, because many of those moves can be false moves. And so you're waiting for those greens.
I'm sure everyone here has been suckered into, the fake out before the breakout. and you definitely don't get the best price, or you own it for too long and you got some option decay or something eating away at your trade. So knowing, I mean, these are just practical logistic questions that can be the difference between an okay trade and an amazing one. And that's just exactly when to get in and exactly when to get out, which the market temperature indicator, you'll hear us also call it the MTI, basically answers that. So you already walked through this a little bit, Hans, and we'll show an example in just a second, but you actually created this yourself years ago. And I know you've made upgrades and improvements and everything. Talk to me a little bit about why you made this in the first place. You know, what question were you trying to answer by building the MTI?
I wanted to appeal to a number of pain points that people have, which is, when to get into a stock, when to get out, right? When to get into a position, when to get out of a position, but also incredibly important ingredient in all of this is how long to stay in something, right? So I have many students over the years have come to me and they said, I just can't make any money, Hans. I make some, I lose some. It's not impossible to make a good trade, but so many people just kind of spin their wheels over time. And I say, listen, you need to stay in those good trades a little bit longer. So when you have something that can help you do that, that's very important. And as you mentioned here, you can apply this to any stock at any time, not just the ones that I'm highlighting.
That's so true. So this indicator that we're going to show you an example of right now, this is something that you can apply to your own charts on any stock at any time. So say you get a recommendation from something else or from Andrew or Mark or something that says, I'm entering an option trade on Robinhood. You can actually check the MTI and see what it might be saying about the power of an explosive move. So just looking at this right now, and for everyone who's here, this is something that you can do on a free platform called TradingView. You just need like the code that Hans will give you, or you can do it inside of Thinkorswim, inside of an actual brokerage, and you can basically just get this to lay over on your chart. So what I'm seeing here, and just to be clear, it looks like we got you can actually have two colors together, it looks like. So like red and yellow, red and green, red and yellow. Then we go full red, red and yellow, red and green, and then full green. This is kind of the full gamut of what the market temperature indicator can look like, correct?
Exactly. You can see the strong greens, and then you can see the green is go super green here. We can see a couple early on,
Right.
Not enough of the strong greens. And then we go down into a bit of a lull here, which is where we'll see this in a moment, where you're going to stay out of trouble, right? Because
Right.
as I always tell members, I say, listen, it's just as important to stay out of trouble as it is to get into good setups. And so you can see, there you go. There's a perfect example. As this stock comes down, it's telling you want to really be focused on defense, sitting on your hands, maybe considering a little bit of income as things start to improve a little bit. And then as you see, we go from yellow, stronger yellow, we get some strong greens, and then we get super greens there, which get us into Apple here, into a position here that is going to really benefit from something that actually has real momentum. Not, I hope it has momentum, real momentum. That is the beauty of the MTI. There's people trade with hope. The MTI keeps, even me, it keeps me from getting excited. I'm like, man, I don't want to miss this run that's starting. Well, let me check the MTI.
100%. So when you're talking about two full greens is sort of your signal for a turbo trade, you're not talking about these greens that have the red at the bottom. You're talking about this full all the way to the top green. That would have been your entry, and then you would have caught, man, I mean, look at this. It's really a run from like 236 to almost $254 for Apple in this example. You really caught the heat of that move.
That's what you want, right? Remember, your mom said, make sure Hannah, you have your greens. Make sure you eat your greens. Well, we hear you want the greens.
Right.
You want the greens piling up. Now, the red spikes you're seeing below, those are interesting. We don't have to get too deep into that, but there's a dampener in there. I call it the dampener that sort of dials things back when there's some fear levels that start to rise. So we don't have to go beyond that, but that's why you see a couple of colors together. But that's what makes this incredibly unique. It is taking a holistic view of fear, greed, and everything in between.
Right. So the green MTI in this example caught a $30 move in Apple for a potential gain of, if you would have bought options there, 193%. Let's look at another example. This is Tesla. As you can see, the MTI changes a lot of the time. But this really is the bread and butter for picking a turbo trade. So Hans, you might have a short list of like, here's the 20 stocks that I'm watching right now. Are you constantly monitoring them to see which ones have an MTI that's turning green so that you can catch a move like this? This was crazy in Tesla. It went 244% on an options trade, and this was almost, gosh, what is that? Over $100 in a stock move, which is crazy.
That's a heck of a move. Well, look, you can have your favorites, right? You can take a look at this, and you have your usual watch list of your favorites. You can sort of scan for new things going on out there. But one of the things I wanted to point out, if you look towards the left side of the screen, you can see a period there where Tesla did terribly. You know how many people were trying to pick the bottom in there and really trying their very best to sort of, basically what this often does is there's sort of almost a hidden value here, which is it keeps you out of wastes of time. That is a waste of time in there where we have those reds and Tesla basically doing essentially nothing. Why are you trying to force something that isn't happening? And when the MTI starts to tell you that, look, something interesting starting to happen again. Look at the direction of the MTI as it goes up to yellows. It tells you this stock may be on people's radar again. It's starting to act like it wants to do something potentially. And as we can see, it does eventually.
Nalini asks in the chat, does this mean when MTI has 2 consecutive all greens, it signals a turbo entry? You are totally following. That's exactly what it means. We're going to show you some examples in just a second. I'm going to kind of get through these because I want to get to show you guys the track record and some of the performance from the last year, specifically in April. Here's another example with Microsoft. You can see, there's a 203% that could have been made there with an options trade. These are some examples of people actually using this. I'll let you guys just read kind of what's on the screen here as I talk through this. But the biggest thing I want to emphasize is, and Hans already talked about this a bit, the MTI takes some practical questions that everyone has when they're a trader. When do I get in? And specifically, when do I get out? Which we're going to show on the next slide. And makes that not a guessing game, not a hoping game, but a 1, 2, 3, you follow this recipe type of game, which can not only change your returns in your trading, it can also be a lot better, more calm experience. You're not taking stabs and hoping for the best. You're actually using a strategy that works. Another piece of what you do, Hans, is you use something that we call a ripcord. If you guys have ever been parachuting or whatever, you know that thing you pull to get your parachute to go is called a ripcord. This is something you use to get out of trades early. Can you just talk about this a little bit, Hans? Because for most people that trade income or have income strategies, this really is what's missing. But you've accounted for this.
Well, that's it. I mean, look at that MTI, guys. Look at the moves it's catching. But every now and then you get something turn around the other way. And we have to address that, right? That's what makes the difference. When you have a 90%, 91% win rate, I think I'm around, with significant profits, right? You can have you can have a 90% win rate and still lose money. I kid you not. You can do that. 90% win rate, but significant gains, as we showed you earlier. So the Microsoft trade, we ended up keeping this trade to a 17% loss, and it could have been a 78% loss if we did not react to this. And our ripcord strategy, which you learn in Turbo Income, is that missing piece of the puzzle that a lot of other income strategies. Listen, it's always fun. Sometimes I tell people the story of, I was a pilot, and you can fly that little tiny Cessna with your little pinky when it's beautiful and the skies are blue and everything. When that hailstorm moves in, that's where the training comes in handy. That's where you better start remembering all those hours you spent years and years ago. What do you do in those difficult situations? And if you don't have a plan, then you're going to be in trouble. And that's really the missing piece for folks.
The MTI can also act as a sort of ripcord. So let's look at this example on Tesla. And you see where you had that powerful green MTI, which would have been, okay, we're getting into a turbo trade. We know this has explosive upside, but then look at when it turns that corner and we get those 2 solid reds back to back, you would have been out of this trade or out of owning this stock, and you could have saved yourself like Tesla over the next 6 weeks or 2 months dropped $120. So this is a way that you actually could have avoided that.
It's telling you a story. It's telling you you're probably going to waste your time here. And when you waste your time, you often waste money and you often miss out on other opportunities. These are things that compound, guys. These are all things that if you really think about why this works and how it works over time, it's all these little features, making sure that you are spending your emotional capital on things that are making sense and not things that are not doing the right things for you.
Who wants to see the track record?
Let's do it.
Throw me some dollar signs in the chat. I want to look at the 2025 track record. I want to look at each section of trades. I want to talk about how those results, if at all, apply to the next year, the next 2 years, the next 3 years. Not every year is going to be a raging bull market. So I want to talk through that and look at some of the April drawdowns. You guys ready to do that? Everybody ready? Let's check it out. All right, I'm going to switch our screen over. We're going to look at 3 different views of the track record, okay? And we're going to start first by sectioning it off into the 3 types of trades. So just bear with me. I'll make this a little bit bigger so you guys can see this. Let me know if that's okay. We'll do turbos are at the top, and then we have a summary, income, and then leaps at the bottom. So we'll go through all of these. Now, you've made the most turbo trades this year, Hans. We talked about this a little bit. When the market is raring to go, you want to be able to say, yes, give me those extra profits. Let's take that on every trade. I'm just going to scroll down kind of slowly right now because I want you guys to pay attention to this column right here. See this column K? This is the return per trade. Now, everyone that's green is a winning trade, okay? The ones that are white, those are going to be losing trades. And what you'll notice as we go through here, not just for turbos, but for also income trades and leap trades, which leap trades are undefeated, by the way. There are only 1, 2, 3, 4, 5, 6, 7 losses this year. Hans has a 91% win rate using this strategy. Now, a couple of things make that possible. Using the MTI to know exactly when to time a turbo trade. I think also, Hans, your trade selection. So when the market is giving me this, okay, I want to use leaps and income. Okay, the market's giving me this. I know I want to use a turbo. You have constructed here a group of trades that can capitalize on any market. So let's just look at the individual categories and their results. So turbos, we've had some questions about hold times. So I'm going to show you guys this. The average hold time for a turbo trade's 50 days compared to income, which is around 31 days, and leaps, which is around 45. So you're kind of in that 1 month to 2 month zone for all of the types of trades. Trade pricing, this is going to be the contracts. You can actually see here, like the formula that Hans uses for some of these. There are some spreads that he's going to be teaching, and luckily for you guys, he has some great courses that you can go through for this, and he also teaches this every week, so this is something you can ask questions about. You want to pay attention to this column here that just talks about the capital required for the trade. So for a turbo on average, it's $896, which, especially for someone who has that smaller account like Andrew with 10,000, that's a great number. You can see the prices go up a little bit for some of these other strategies. Now, that's why some of the larger accounts lean into these. Hans, I did want to ask you, let me play devil's advocate for a second. Let's say that I have $5,000 or $6,000, okay? And I do want to do this. I think that this is amazing, interesting, and I want to grab some of the amazing results that you've had. Could I join Turbo Income and just make like turbo trades? Could I do that?
Absolutely. Look, you've got a menu of trades that you can see here, from slightly higher capital to very, very reasonable amounts of capital. If I had $1 million account, I'm using all kinds of these trades, all types of trades, right? I'm budgeting it out with the things that we've been talking about, our charts, our graphs, our pie charts, etc. If you have $4,000, $5,000, $6,000, there's nothing to stop you from joining. You're going to adjust to the kind of trade that is gonna work for you. to grow your account as quickly as possible, and then you're going to evolve with your success over time.
That totally makes sense. Rick asked a question here. He said, I thought 3% was the max per trade. Rick, what we do for all of our track records when we show them largely like this, we always use $1,000 per trade. Hans still obviously sticks to the 3% rule for his own account, and this is something that you would learn inside of Turbo Income. I want to show you guys the second version of the track record. Now, this is all the same trades. Hans has made 78 trades so far in 2025, and people who trade Turbo Income. But this is sorted by the entry date. So what you can see here are trends as far as what you're trading at what time. If you go back to April, you were using some leaps in income, which will show some results in just a second. Then you kind of turn to the turbos. And then especially when the market really gets going, we're selecting that turbo club again and again and again in these trades, Hans. There's definitely a seasonality to what you pick and when. That's very important. How would you say, so there's been some questions like, if the market isn't rearing like this year, if we have a flat or if we have even a down market in a year, it sounds to me like you would be using more leaps in income. But what could I expect return wise in a year where I'm using the leap and income clubs much more than the turbo? Like, what would that look like compared to the 78% return that we've seen so far this year?
Yeah, well, I mean, of course, it's going to depend on what we've gotten into, or the types of names that we're trading, but would be perhaps just a little bit lower. But really, that the important part is that we're going to be shifting around to the trades that have what I call edge, right? If anybody who follows Option Pit, it's all about edge, right? Where are we getting that little bit of edge? I have people who call me up and they say, over the last 1,000 points to the S&P, they say, well, which cover call should I sell? And I'd say, well, I'll tell you which cover calls you should sell. None. You should sell none of them because there's no edge out there. So I'm always looking at where is our edge? Where am I getting that casino edge? And so we're going to shift around in here, and our returns will move with that. But you can see that the turbos and the leaps have similar profiles. So we probably end up doing a little bit more leaps and a little bit more income as well.
We actually have a great example of you doing this year. So again, this is sorted by this year. And then I just grabbed specifically the trades that were made during April. We have had so many questions about this. What happened in April? What did your account look like in April? I'm going to make this even bigger so you guys can see this. These are the April returns. Now, as you can see, no turbos, just leap in income, no losses. And these weren't all even like, you weren't shorting all of these stocks either. You were finding some actually bullish opportunities inside of what was going on with the market. But you didn't lose a dime in April.
You know what happens, just having done this for so long, Hannah, and I hope this rubs off on people as they learn from me, is that I find that extra gear of patience. And I teach this too. I say, listen, when things are a little bit rougher out there, you want to wait. One of my favorite positions is sitting on my hands, watching, observing, and you really want to wait for those 5-star trades. You're letting the 1-star for absolutely go by. You probably let those go by most of the time. You're letting the 3-star trades go by. The 4 stars start getting interesting, and then you're waiting for those really beautiful fat pitches that you can hit. And it's something you just kind of develop over time. You're never going to get it perfect. And that was very much that kind of market where you just kind of like, okay, let's see how this unravels.
I'm going to ask you a tough question. That's my job because I have to represent the audience here. So I'm gonna put you on the hot coals for a second here. What would you say? So I think an objection that some people might have is they'll look at this and they'll say, well, the market was going up anyway. You put on a bunch of turbos. Sure. That seems obvious from what I've learned so far. What happens next year? And I want to know how you would be prepared for and approach something like that, and what these 2025 results mean for me sitting here if I wasn't trading them? Because these trades are amazing. 91% win rate is insane, but it's also over. So
it's over. But think about it, Hannah. So you're asking, what do we expect moving forward? Well, I think this is going to work in 2026. This is going to work in 2027. What happened in 2025? Everything happened in 2025. Over the course of a year, pretty much we saw everything. We saw, a huge bull run. Then we saw an absolute implosion in April. Then we saw a massive hated bull run, which so many people hated. And I was saying, are you crazy? This is fantastic. There's great things happening. We saw periods of high volatility, low volatility, geopolitical issues. What else do we have? Government shutdown. We had an election. If you go back as far as a year, we had an election. We went through anything that could have happened this year. And you can see the results in a tumultuous year like that, with so much to be happy about and some periods to be fearful of. And here we go. And then again, we've got the right bag, a golf club bag full of the bags that full of the clubs that we have at our disposal to use in those various markets.
Right. And it's so true. VIX high, VIX low, government shutdown, the tariff tantrums, the election, another election. Like, we really have been through the entire gamut of anything you could really experience in the market, and you were still able to generate that level of income.
Listen, and you know why? Because I'm not just some guy in a lab, some scientist coming up with something that sounds novel. I use this. This is stuff that I've developed over decades. This is what I use. So when you're in this program, you benefit from all the development and the wisdom that has come with having done this for so long. And that's why I built Turbo Income to be like this, because I want all those tools at my disposal, and I don't want to go through 6 months where I don't have anything to do. And so I went, well, what can I do here? Well, look at these option levels, look at these price, all the stuff that you're going to learn, because you get something called the Edge series. You get to learn a bunch of cool through a number of courses that we have in there. You're going to get into my head and learn things that you have never, ever come across. And that has all gone into this product.
Let me walk you guys through everything that you would get when you join Turbo Income with Hans. We do have a special offer for tonight. It is only available tonight, so stick around for 4 or 5 more minutes. This literally will expire tonight, so I want to make sure that you guys see this, because it's going to be gone at midnight. Now, of course, you're going to get all the trade alerts for each type of income. It'll be turbos, leaps, and income trade alerts. We send these out via email. You can set it up to actually get these alerts straight to your phone if you want to be a bit more hands-off. One of the beautiful pieces of this strategy compared to some others that you may own, because the hold times are longer, it's not like I have to have my phone, get the text with the trade, and put it on in the next 30 seconds. If you need to do the trade at the end of the day or even the next day, 99% of the time, you're still going to be able to get into that opportunity. So we had some questions earlier about, am I going to get the exact option trade to make? The answer is yes. Hans is going to send you exactly what he is doing, and those same alerts that created this track record over the last year. The second piece that you guys will get, and this is a big deal, is the market temperature indicator. So what we showed you, Hans' red light, yellow light, green light system that tells him when it's time to go on a turbo trade, you will have access to that. You can either use it on a free platform or you can download it inside of a paid platform. We've tried to think of everything so that you don't have to do anything extra to use this. When you join Turbo Income tonight, you're going to get something you can download that will walk you through how to turn the MTI on your own charts. And again, Han pointed this out earlier, you can use this on any stock in the market, not just the ones you're trading for Turbo Income. Say you have Delta Strike or weekly profit cycles, or you want to see where momentum is trending on any stock that you love to trade. You can lay over the MTI and look at that. Hans also does his weekly live trading session. So there's been a lot of questions. Okay, Hannah, you got me. This looks great. I see the returns. I want to do this. How hard is it? What do I actually have to do to get these types of results? Really, it's an hour a week. That's going to be your main commitment. The live trading sessions with Hans are Monday at 1, We record those. So if you can't make those, there's always replays. You can go back and check it out. There's also a 24/7 chat room. So you can always use that and ask questions. These weekly live trading sessions are really important, Hans. And I know that you've put together such an amazing group in Turbo Income. I'll go in there, not on Monday, and people are chatting about other trades they're making or locking in wins. And that is a huge piece of the experience of this, because in addition to wanting to make money, people also want to have fun. Let's talk about the markets. Let's learn some stuff. Let's have some fun. Making money is fun, but it's great to have a community of people that are learning something at the same time as you. You have direct access to Hans there. You can go ask a question. Hans is super active and he'll actually respond to a lot of the questions. So you'll have access to that too. There are a bunch of other bonuses you get. I listed them out here. The Ripcord strategy. There's a 7-week course with Hans. Everything you need to know about Turbo Income that we put together. He sends a watch list of some of the turbo trades he's watching. You got that income video library, 3 different ways you can scan for quality stocks, some alternative income strategies, especially for people who have more capital. There are a couple other avenues you can use to generate income that are really, really, really low risk. If you have the money to be able to do them, Hans can teach you those too. And then we got a couple free special reports for you guys as well. I want to put this side by side, and then I'm going to show you the price and we'll talk about all that stuff. But I want to talk for just a second about cost, because I think a lot of people look at the 1% or the 1.5% they pay their financial advisor and they think, oh, that's cheap. That's cheaper than this. That sounds cheaper than this to me, and I don't have to spend an hour a week and whatnot. I just want to put these side by side so that you can actually see some of the differences. With your FA, you're paying that fee, and maybe it sounds easier. It seems safer. It's good enough. You got that 12% year to date. If you do this with Hans, it's lower maintenance. It's an hour a week. And yes, there's a cost, but let's talk about what that cost is actually worth. You're going to get 78% year to date. Of course, I can't guarantee next year, but just looking at this year so far. Now, to get this normally, the retail price would be $3,997. That is not for us here tonight, okay? For those of you that are here, this is the price we're going to do tonight. And we'll get this order form posted. You guys can click on it and read it while you listen to me talk to you, okay? We're going to do 55% off for 1 year, so it's $17.97. This price is only here till midnight tonight. So for those of you that are here, we love when you come to our events as a thank you for showing up and participating and being here at Option Pit in the first place. We wanted to give you guys a deal for being here, so it's $17.97 for a year. Now, if you're watching this later, if it's Wednesday or Friday and you're watching this, sorry, this price is going to change. It'll be $24.97 starting tomorrow. So this $17.97, you get $700 off. That is for today only, till midnight. So click on that form and have a look at that. You're going to see a second option on that order form as well. You can do a 3-year option. It's $3,797 for 3 years, which breaks down to about $1,200 a year. So if you are like, I am sold for the long haul and want to get some more bang for your buck, do that $37.97 offer for the next 3 years. Now you guys can see a summary here of everything. Hans has also put together a little bonus for those of you who take the 3-year. The first 5 people, we got a little surprise. The first 5 people that take the 3-year, what are they going to get, Hans? What do they get to do? We came up with something fun.
They are going to get some one-on-one time with me. And I assure you, Hannah's going to say it's only 20 minutes or something, but I can't shut up and I want to help my people. Guys, I think, you had something written there. It said good enough. So we talked about John Smith or whatever it was. That was pretty good. And it might be good enough for some people, but that's not good enough for me. That's why I developed Turbo Income and the strategies that are in Turbo Income. So you guys have seen the indicator, you've seen the results, and now you're seeing a deal that's going to expire in 3 hours. I want you to join me in Turbo Income. I want you to experience what we have been experiencing this year in a very crazy market that is just giving us fantastic opportunities left, right, and center. Join me in Turbo Income. Sorry to interrupt, Hannah, but keep going.
No, I love it. Those of you that are still here that have questions, please pop them in the chat. When you click on the order form, so there's a button above Hans in my head that's jiggling a little bit. It says join now. If you click that, it'll take you to the order form. There's also a link in the chat, so you can use either one of those. When you scroll all the way to the bottom, there's a promo code. It says Turbo. We have already applied that to the price. So at the top, if it looks like you're paying $24.97, scroll down a little bit more and you'll see the $17.97 at the bottom. It has already been applied. So we already did the work for you and took the discount off. You don't have to do anything extra there. I'm going to funnel you some questions, Hans, and let's go through these while people are on the order form. And if you guys have any questions, pop them in the chat and we'll go through them. Okay, not yet there. This is a good question. They say, how do you determine what type, if you're going to do a turbo, leap, or an income? So if you're looking at a stock, how do you pick which approach you're going to use?
Well, that's a great question. And of course, we bring it back to a number of factors, but one of them is going to be that MTI indicator, right? So it makes it very simple. There's colors. I mean, this is about as easy as it gets. You've got the green, you've got the red, and you've got the yellow. And when we're yellow, I'm not going to say let it mellow, but that's our sign to start to look at income, right? That's because some things in the market and in the behavior of that stock and in the behavior of the options, et cetera, are showing me that this is a more sensible trade. And then when it's time to step on the gas, the indicator is going to help me know that when it gives me that full green, that is when we're going to, strap in and go for it with that explosive upside move that is just getting going. We saw that chart Tesla earlier. It started getting full green before this thing even started to break out. So sometimes the MTI even surprises me, and that's how we know.
Ron L's asking about the refund policy. Ron, we have a 14-day money-back guarantee on all products here at Option Pit. So what that means is if you take a step forward today and join us, you basically have 2 weeks to get the alerts, attend a couple sessions with Hans, see what you're going to get on the back end. You can sort of vet the membership. It's more important to us that you guys take a step forward and actually try this. And we know our products can stand the test of time. So we want you to get in there, actually start using the product. We have a 14-day money back guarantee. We always honor that. You don't even have to really have a reason. You can just be like, I don't like this. So that's how we work. Sal says this seems to be designed for long entries only. Sal, the average hold time is anywhere from like 30 days to 45 days. So it's definitely a longer hold time than, a day trader or a swing trader. But nothing too crazy. Durango Andy says our session's recorded 100%. Every Monday session's recorded. You'll always have access. So you don't have to worry about that. Bob K says ordered 1 year. Welcome, Bob. Anybody else taking a step forward?
Welcome,
I can see a bunch of you on the order form. I see some orders coming in. Throw me some dollar signs. Tell me you're in Turbo Income. Introduce yourself so Hans recognizes you on Monday.
Let's see it.
When you hop in. I love it.
And even if any of you here are already in Turbo Income, because we know some of you are junkies and we just keep on hearing about income, let us know as well. But yeah, everyone who's signed up already, drop your name in there, and then I'm gonna say hello to you on Monday and welcome you personally.
Oh, Sal, sorry, you meant short entries. They're asking if you go short as well as long, Hans, on your positions.
Well, I'll tell you what, because I can't help myself. For example, we do have a strategy that's protecting a holding. So sometimes we do look at those. It tends to be geared more towards grabbing those opportunities for upside. But you'll see there are other things going on as well.
Sue, I saw also just bought a Turbo Income annual. I'm curious who's going to be the first one to get our 3-year and secure the first meeting with Hans.
That's it.
He's excited for those one-on-ones.
Let's do it. Let's make it half hour. You're going to get a half hour, and we're going to get you set up. We are going to get you on the right track. We're going to figure out exactly what makes you tick and how Turbo Income is only going to enhance that.
Other questions, pop them in the chat. I want to make sure that anything that is holding you guys back tonight, or any questions that you still have, that we do answer them. Since this deal only goes through tonight at midnight, we'll take a few extra minutes here to make sure that any questions you have, we really answer them.
I actually,
Um,
Hannah, I actually consult. I do some mentoring. I consult for a number of RIAs, and I bill at most of the time around $850 an hour. So, guys, you want to spend some time with me, somebody who has done this for a very, very long time and probably knows way too much, and you're going to hear a whole bunch of it. So, absolutely, grab that 3 year and let's have a very serious powwow about the direction of your financial future, because that should be a number one interest for you right now.
You guys can also give our team a call. We have a great team that always mans the phones. If you have any questions, the phone number is on your screen. It's 888-872-3301. There's also an email address there. I do recommend that you call or email tonight, since this deal is going to expire. So if you're trying to lock in that $17.97, that's something that I would definitely take care of tonight. Let's see. What else do we have question wise? What is the minimum account you suggest to join this program? Poor Richie asks.
Yeah, so Poor Richie, we are going to solve that moniker, that
That's
name
right.
that you got. That's right.
Rich
That is going to be
Richie.
our goal. Yeah, it'll be poor no more Richie.
That's
Um,
right.
So, well, $4,000 or $5,000, absolutely. We talked about how there is a trade for everyone. We have trades that are $300 in capital. We have trades that are $2,000 in capital usage. So, they're frequent enough that you're going to find something that works for you. And that's one of the great things about it. It is not a sort of cookie cutter. Listen, every trade is X amount. It's going to vary, and so you absolutely will find a home with an account of $4,000 or $5,000.
Mike Myers also just joined. Lawrence, welcome. Rick
All right.
K, I love it. Welcome to Turbo Income. You guys are going to love this. Hans, let's talk about the next couple of days. So it's Tuesday. What will the rest of the week look like for people who just joined Turbo Income? I know your next live session will be next Monday, but what are you seeing in the market right now? Like, what could happen even between now and the first time that you guys meet live?
Well, it's interesting actually, because we're starting to see some things develop. I'm seeing a little broadening out in the market, and we saw some tech stocks kind of take it easy today. So we're actually starting to look at positions that are going to take more advantage of not as much AI. AI is still 100% focus for me. So I'm always trying to look at where the puck is going, right? So that's an old
Sure.
hockey saying. And I see some extremely interesting things going on out there. And we're going to be putting on some more trades tomorrow. So you're going to be able to jump in right away. You can jump in right after you sign up and get your login and everything. Go see what's going on in the chat. And then tomorrow I'm going to be in there hashing it out with the members and to figure out what our next awesome move is going to be.
I saved a testimonial from earlier from one of your members that I want to post here. And Sal, I saw you ask that question twice. I'm going to get to it next. But I want to post this. This is from someone who has Turbo Income. You can read this in the chat right now. And this experience is not isolated. A lot of people that trade with us here at Option Pit, and if you're new, this is important, and you should feel validated in your choice to trade here at Option Pit, because even just showing up to this event, you guys that are still here, you are ahead of 99% of other people. You have taken several steps to get to where we are right now. You signed up for this event. You showed up for this event. You're here actually listening. One of my favorite sayings is, you didn't come this far just to come this far. You're only a couple steps away from actually making some of what you saw today possible for yourself. You're only 2 or 3 steps away. Yes, you have to take a bigger step and join this, but we put that 14-day money back guarantee on there for you so that it removes some of that risk. And I want you guys to know that just for being here, you're already ahead of so many people. And you just got to get that little bit remainder of the way to actually take one more step, join us, take the next step, show up for your first live session with Hans, which is going to be a lot of fun. You're going to get some information and actually start to make some of your first trades.
That's a great point, Hannah. You know what? Just being here, even right to the end, even though we're incredibly entertaining and you can't help it, but just being here, you are doing something that most people look. I've done courses, Hannah. I've had people sign up for courses, and you would be amazed at how many people don't even ever take the first lesson of the course. For some people, it's a curiosity. They feel like just buying something or watching something is good enough, that scratches some sort of itch and gets them. That's not it. And so for you guys to be here still listening, you are so close, and you have gone farther than 99% of people who wish they could do something better for themselves, for their families, for their children, for their children's futures. We're going into a little bit of an uncertain future with AI and the way things are changing in the world. It is going to take a little bit more of a move your feet, right? I have that old saying, sometimes you got to just move your feet. Move those feet, do something that is going to benefit you over time. You're going to learn incredible things. So that's a great point. You are almost there.
Yeah. Get yourself across that finish line. There's no better way to do it than to have someone who is an expert, who has managed billions of dollars, who has generated over 750 million in cash flow for people who invested. Like, that is who's on your team. That is who's whispering in your ear when you're on the fifth hole and you're making a putt, and he's saying, wait, did you notice it's sloping a little to the left? And really, I think you should actually hit it this way. Like, that who is going to be in your ear as you're doing this. Like, you are not alone whatsoever. You have an actual golf pro on your team. We're doing a lot of golf analogies on here tonight. I don't know where that came from, but for the people who love golf out there, you're going to know what we're talking about. We have our first 3-year, Richard W. Congratulations.
Hey, Richard.
Third one of the one-on-ones with Hans. I expect these to go by midnight tonight. So congrats, Richard. You'll be in there. Also, a bunch more annuals coming in. Francis, Tom, Belinda, Harold, Molly. Welcome to Turbo Income. So exciting for you guys here tonight. More questions, pop them in the chat. Gibby, if you ask any questions, I'm going to answer. I'm going to do yours first, just for DU.
WA, you're so funny. You said you get to be in Hans's hot tub. No, you don't. You don't get to be in my hot tub with me.
That's for lifetime members only.
Maybe lifetime member, yeah. Then you may pay extra to not be in a hot tub with me, and that's okay too. That's just fine. But that's pretty funny. That refers to a comment I made when we were doing lifetimes and we were like, you get me constant. I'm like the luggage you can't get rid of. So that's the next level of when you really want to take things to another level. But the 3-year, Richard, I'm so happy to see you join, and I look forward to speaking.
Couple more questions here, Hans. I'll funnel over to you. The refund is cash back. It's 100% cash back, so it's not a credit. It's an actual real life refund. We wouldn't bait and switch you like that. It's a real refund. Gibby asks, can you talk about tax implications for Canadians since they're penalized more than Americans with non-tax deferred accounts for option selling strategies, etc.? Does that apply here, Hans?
That's a whole other. Let's talk offline, Gibby. We don't want to bore people with tax talk at this point. Well, we've got another question here from Bill B. What about the question 100%? What a great question. 100%. There are a couple of positions in there. Now, what you need to know about those is that they are paired up with another position. So there was a SPY trade, for example, that we did at one point, and there was 100%. There were actually 200% losses in there. The whole thing made money though as a group. As a combination, as a package, because
I'm going to go back over here because I just want to show what he was asking. So the question that he's asking is about these trades. So he's saying, if you're using the MTI and the ripcord, how could you have 100% loss? And Hans is saying because these two things actually go together. See how they're both trade number 18. So really, this would have been an average.
Yeah, that's an average. So that was
right.
Yeah.
You're taking the difference between these two. That's a great question. Good eye. I like it that's what we're asking questions about. But I'm going to be honest with you guys a little bit. When you have a 91% win rate, it kind of doesn't matter what some of the losses are, because that's just a great position to be in, Sorry if this has been answered already. Is there a trial period? If so, how many days? It's going to be a 14-day money back guarantee. So you have 14 days to trial everything. 14 days. I'm trying to get the screen back here, Justin, if you can just pop that back up here. I want to show you guys just a couple of things. We have some other testimonials from people trading with Hans that I'm going to pop up on the screen that you guys can look at and read some feedback from people who are actually using this service. You know,
Now you're gonna embarrass me. You're gonna embarrass me, Hannah.
I know, Hans, look away really quick so people can read this. Can you see my screen? I don't see it right now, but it might just be me.
You know, the funny thing is, I've never a single time have I asked for anybody to give me a testimonial, and people just they do them all the time, and I'm grateful. I'm humbled. I'm glad I'm making the difference for people, right? I've learned all these things over the years, and you know, it's really it's gratifying. It's fun and it's gratifying.
Guys, click that order form again. That annual price, the $17.97, that is only till midnight tonight. Tomorrow, that will be $24.97. Tomorrow, it will be $24.97. So take advantage of this tonight. Also, that phone number moving across the bottom of the screen. Give us a phone call. If you have any questions, our phone team is amazing. They'll be able to answer them for you.
Yeah, look at that one there, Hannah. From AZ, I forgot to say the Edge series is a total bonus in addition to the masterclass. Hans just does not stop adding value. So, you know, it's the gift that keeps on giving, just like in Christmas Vacation. Except, you know, it's not jelly of the month for a year. It's actually real value, week after week after week, month after month, and you're just going to really love it.
Hans, you've talked about this you talked about this a little bit too today, but part of the reason why you created Turbo Income, and you said this yesterday, is because an FA's returns weren't good enough for you. Like, it wasn't even a question. You know, you work hard for the income that you generate. You want to put that to work and really squeeze all the juice possible out of what you can get out of that. And that was really, you know, the reason why you put this together. And all of the trades that we showed today and that we're talking through, these are trades that you actually make. So some people here tonight might not know that. Here at Option Pit, in all of our strategies, whether it's a Hans or Mark or Andrew strategy, our traders trade their own real money because A, they believe in the strategy, and B, they want to get the same results for themselves that you guys are getting. But I can't think of a better endorsement for a strategy than actually using it with your own money. Like, there really isn't a better endorsement. So every trade that you go into as a Turbo Income member, know that in the back of your brain and feel confident entering every position. They are positions that Hans is also in right alongside you. So he loses, you lose. When he's got to change a trade, you got to change a trade. You guys really are in it together every step of the way.
I hate to lose money, Hannah. I hate to lose money. And so when I do a trade for myself and for everybody else, I really, really do care, because I'm kind of a cheap guy. My kids will say, you know, Dad, you're so cheap. I care about every dollar because I had to. You know, I traded, I didn't mention this, but when I was a market maker, I traded for 15 years not getting a check, literally not getting a check if I didn't make a profit. That wasn't some cushy
really
job.
Under the gun. Wow.
Yeah, making 300 grand a year, 200 grand a year, whatever it is, just, you know, and throwing ideas out there. Like, you know, many of these people on TV, they couldn't care, you know, right. It doesn't matter what happens to them. They're going to drive home in their Benz at the end of the day, whether they made a good call or not. I literally didn't eat for 6 months when I started, and I went, boy, this is going to be a short career. And then it started to click, and then it wasn't long before I was the top trader on the team, on a team of market makers, option market makers, and I ended up being the top trader for 12 of 15 years. But it took some time, but I had to care about every single dollar because right. I knew that I would not get a check.
Right. You got to sink or swim. I mean, that's the epitome of eat what you kill. You really, you got to do what you got to do. And once you have that mentality and keep it, that's what you guys will get access to here. So Rudy has a good question. I'm sure others have this, so I'm going to throw this to you, Hans. They say, starting with 0 invested, so at the beginning, I bring my account in, is the goal to be fully invested minus the cash reserves? And if so, how long would it take to be all in? So what kind of pace are you moving towards to take, okay, I got $10,000, $50,000, actually put it all to work minus that cash reserve?
Have it all to work. Yeah, that's a great question. That's a really great question. Nobody's asked that before, but you know, I'm very much about good trades, right? So remember, when we're I mean, investors too, but when we're traders, when we're trading, when we're trading, we're not paid by the hour, we're paid by the trade. And so that's something that has guided me for a very, very long time. And so I'm not going to force things. People may ask, well, can you guarantee me 10 trades a week? No, I can't. I can't guarantee. I will guarantee you that I will put my best effort into every effort to search for the right trades. You don't force trades, right? That's when you get yourself into trouble and then you start to add to bad trades. Anyway, it doesn't have to be a long podcast on that, but the point is, it is about making better decisions. And I find, I think people kind of struggle with that a little bit when they become full-time traders or they start trading more frequently. They kind of feel like, this is not your typical job. You are not paid by the hour. So it's weird. People feel like they have to do something because the market's open, because the colors are blinking up and down. You don't have to. So we're going to wait. And so my guess is probably it's going to take you a few weeks to get maybe fully allocated. And of course, that's going to depend on the market.
As you look at the track record too, just here so you guys can see, I mean, these kind of go in waves. So these are sorted by date. If you look at April when things were a little shaky, you have less trades. May is about the same, but then June, Hans really sees a lot of opportunity and starts to pour it on. So you would have allocated a big chunk of money in June. July was kind of the same story. So, like we said earlier, you want to swim with the tide, not fight it. When there's a lot of opportunity, you want to be in a place where you can jump on it. And when there's not, you don't want to give away your money. There's no reason to do that. So you want to stay in a good position to make the most that you can. All right. I have to call out some new members that are coming in. Mary, welcome to Turbo Income Annual. We got Scott, Richard, John, Pavel, Timothy, Susan, Francis, and Laura, all new Turbo Income Annual members. Welcome, you guys. Good job locking in that 1797. I'm really excited for all of you to get started trading some Turbo Income.
And Roba, question from Roba, Hannah, is the renewal fee $17.97? Yeah, absolutely. You lock that in. That is why you want to get going on this, because you are locked in.
Good point. Great point there. Yeah, that is an ongoing fee. So we're not going to charge you more next year. It's $17.97 only. That's the cap for you. Hans, we have kept people here for about 90 minutes. Are there anything that you want to leave people with tonight? There's still 180 people here, and I'm sure there's some people in this room that, are deciding if this is the next step that they want to take. Do you have anything to say to those people to kind of get them across the finish line here? They've already taken a couple steps, but this is really the most important one, to actually put your money where your mouth is and start to use it. So
this is it. Without making this final step, it's been an hour and a half of gut wrenching laughter, of course, with the two of us. But if you take that final step and get into our world, our ecosystem, you're going to be learning things that you haven't seen before. You're going to, and really, it's a holistic system that I've developed here that is about income, using some leverage in the most appropriate ways, and really the three legs to the strategy that really go together to conform to many different kinds of markets. So you're not getting into one single idea, one single strategy. This is something that evolves with the environment. As we've seen this year, there are different environments involved in markets, right? There are very different markets, from extreme fear to extreme optimism, and a whole bunch of stuff in between. So this is it. Ask yourselves, is this a moment where you think, I think what I'm doing right now is not good enough, or I don't think my FA is doing something that I think is good enough. If you think there is more to it than what you are getting right now, this is your opportunity. And I would love to see you guys in there. And that's it, Hannah. Thank you very much for a wonderful time. And thanks everyone for coming.
Of course. Last thing I'm going to show you guys, click on that order form above. There's a bunch of links in the chat. You can't not find it, but click on it and take a look. When you do, this is what it'll look like. And as you kind of scroll down, I just want to show you a couple things. So this is the countdown till midnight. When we hit midnight, the 1797 will be gone. That's actually going away. But what I wanted to show you is as you scroll down, you can see the track record here. So you can look at this again. All of the trades for the 3 different types of income that Hans is using, they're all on this form. You'll see a nice summary of everything that you're going to get as a brand new member. Okay. We already went over a lot of this, but you're going to see it all here. You'll see that money back guarantee is on here as well. And then at the bottom, when you get down here are your 2 options. We got the 37.97 and the 17.97. Now, when you get to this piece, it's going to look like it's 24.97. But when you select this turbo code has already been applied. So at the bottom, you'll see that it says 17.97. Just want to make sure that's 100% clear. If you pick that, we are taking the $700 off for you. We'll be doing that till midnight. So if you need to go, talk to your wife or talk to your husband or whatever before you actually place this order, you have a little time to do that. This will be available till midnight tonight. So even if you see this here, don't worry about it. The number you got to pay attention to is down here at the bottom, and you can see it's $17.97, and we already took that discount off for you. So just to clarify, right at the bottom. Hans, I'm going to the Avalanche game tonight. I'm going to go watch some hockey. So I got to get out of here in just a minute. But thank you so much for coming. For everyone who's here, do we have any final questions? 1 or 2 things I can toss to Hans? Or are you guys, did everyone already join? I mean, there's so many people that I can see are on the order form and new members. Just in the last few minutes, we got John, Troy, and Greg with 2 G's have joined Turbo Income.
That's right. And Sal's asking about the Black Swan event. Sal,
Sal, I left you hanging. I'm sorry, Sal.
Look, Sal's question, Woodchuck Chuck wants to know too. Listen, I will have a chat with you about Black Swan events when you sign up. The strategy does not regularly protect against something like that, but this is something I ran a bunch of Black Swan funds, so I can assure you that I'm always thinking of the potential for those things to happen. And that's why I'm very, very cautious. In fact, if you can believe it, I'm actually quite cautious, even considering that performance. And I think that's an important thing to have, to not be sort of a loose cannon. And we can have a chat. You sign up. How about you and I have a chat?
Everyone who's still here, thank you so much for being here. I hope you got some value out of tonight, even if you weren't able to join Turbo Income. I hope you learned some things about allocation, at least got some information on what your FA actually does and doesn't do. At least you can be fully informed when you make some decisions like that. So we are here as your advocate to make sure that you have all the cards on the table when you make decisions. At the end of the day, it's about your financial future, and you got to be able to make the best decision you can with the most information you can. And that's what we're here to provide. So final call, give us a phone call, click on that order form. This expires at midnight tonight. Hans is amazing. You're going to love this. It's a great community. You're going to have a great group of dozens of new members who join tonight. You guys will all be starting from the same point of view, learning, putting your first trades on together. It's going to be a great experience. When you're learning how to do stuff like this, you don't want to go it alone. Do it with a great group. Do it with a great guide. Hans, thank you so much for taking the time to come and do this. I know you have a very busy schedule and you're trading and doing all this stuff. So I really appreciate it. And I know that everyone here appreciates it too. So thank you so much.
The pleasure's mine, Hannah. Thank you so much. And thanks everyone for coming. Thanks for watching, and stay safe out there. And we will see you in the chat room when you sign up, and all the best.
Love it. Thank you guys so much. See you in Turbo Income.